Hello everybody, welcome to another update on the stock screener. Today we are going to talk about a new hype, which is uranium. So as you can see, uranium has been bottoming out and is now ready to take off. And I think there is a catalyst for this, a huge catalyst. And that catalyst is Sprott. So Sprott is now beginning to buy uranium on the secondary market. And this is going to push up uranium. So let's take a look at the numbers. We have 1 billion in net asset value right now. And in a recent interview, they said they could double this in a year. So this can go to 2 billion in just a year time. Now let's take a look at global uranium demand. It is around 200 million. And we do this times 40. So that's about $7 billion. Okay. It's about $7 billion. And we have 1 billion in demand that will come in from Sprott next year. So this will actually push up uranium demand by 15 to 20%. And that's huge. Okay. That's really huge. Because this graph is going to rise from 200 to maybe 250 in 1 year time. So this is going to rise to here. So you can actually just delete this chart because this is not correct anymore, because this will single-handedly go up like this, and then it will stay like this. It will go up like this. So this whole chart has been pushed up, and that's the new demand. And Sprott is not going to sell these assets. He's just going to buy more and more from the secondary market, and he's going to hoard this. So this chart here will go up like this and then go up more and more. So the whole curve is shifted upwards. So that's why we are going to see uranium go up. Right? Now, how do we bet on this? How do we do this? Should we buy the uranium miners or just the physical uranium, meaning Sprotts? So you can buy Sprotts at TSX. This is the symbol U.U, and this is how you can buy the physical uranium. But I will show you now why it is not good to buy the miners. So you have the physical, which I am a proponent to. You can buy this. It will go up. It will probably go up double in the next years. And I'm going to show you why the miners might not do that. They are probably topping out already. Let's talk about Cameco, which is the most important one. And then I also have NextGen Energy, which is the lowest cost developer in the world. I think these two are the best to look at. And I think these are not a buy at this point. So let's talk about Cameco. It has a market cap of 8.8 billion. I have the numbers here. 8.8 billion. The AISC is about 30, maybe higher now, but it was 30 last year. And steady state production is 26 million pounds. And you can see here they have these mines: Cigar Lake, 5 million, MacArthur, which is actually closed right now because it doesn't make money. It has 18 million pounds of production. Then Inkai, 3 million pounds. So in total, they will get 26. Now the AISC is 30, so we can calculate the value from this. By the way, production is going to be 15 million. So this is below the 26 million that they will have if MacArthur restarts. But let's do the valuation. So very easy, we do the production times the price of uranium minus the AISC times 5. This is my formula that I use for all miners, gold miners, lithium miners, everything. So if it's 30, then of course Cameco is not making any money. That's also what's happening right now. They are not making money. Look, the earnings are negative. Here, 2020 negative. But today the price is 40, so they should make money, and that's about 1 billion valuation. Look at the market cap, it's at 8.8 billion. So this is completely overvalued. 8 times overvalued to my metric. This is insane. So let's take a look. Where is 8.8? Somewhere here. So they are actually trading at a uranium price of 100 now. Cameco is now trading as if uranium is somewhere here. This is completely insane. So I would not buy Cameco at this point. I think this will probably go down in the future. Also, Cigar Lake only has 10-year mine life, so this is also going to shut down soon. Okay. Now let's go on to our next guest, NextGen Energy. Same here. We have 2.7 billion market cap. We have the NPV here. Okay. We are now at 40 uranium price. NPV is 2 billion. So it's already trading above the NPV, and the project has not even been built yet. 2 billion. And mine life is 11 years, so we normalize it by dividing it by 2. So it's actually worth 1 billion. And we have a capex of 1 billion, so there will be dilution going forward. So yeah, where is it trading at then? 2.7 billion. Then it should be worth 5 billion NPV. So it's now trading actually at a uranium price of 80. So my valuation here is about 8 billion at 80. And 60 uranium, we have 5 billion, 6 billion valuation, but we need to, of course, subtract the capex from that, and then it would be 4 billion or something like that. So if we use my metric, we are probably trading at a uranium price of, let's say, $50, somewhere here. Okay. So yeah, NXE is fair value if the uranium price is at $60, between $50 to $60. But where are we now? We are still at uranium price of $40. So NXE is also overvalued. but Cameco is the most overvalued of them all. And if you look at all these uranium miners, they are all completely overvalued. I have checked them all. I wouldn't touch these uranium miners. I advise you to just buy the physical, and that's via Sprott. Because Sprott will be squeezing the uranium market higher by increasing the demand, and they will never sell it again. Hope you liked this video, and I'll see you in the next one.